Welcome to the Matter Financial Report. I'm your co-host, Tony Shore, and I'm here with the man himself, Michael Matter. Michael, how are you doing today?
Tony, I'm doing great. How are you?
Excellent.
You're celebrating this week. You
I
want to tell the
am.
listeners what you're celebrating?
My birthday. It's my birthday week. We celebrate all week. This is a big one. This is the one we've all been waiting for, Michael. I am 60. Can you believe that?
I can't. And if the podcast listeners are watching us on YouTube, they wouldn't believe it either, Tony. They would think 40 at the most, right?
I don't know about that, but yeah, and people are like, "You're 60? Is that your real hair? Do you color it?" No, it's my real hair. I do not color it. But yeah, I don't feel old. I don't feel 60. Not that 60 is old. Nowadays, 60 is not old.
Tony, you got
60s,
hair for TV. The face, I don't know, might still be for radio. That's
my
for
face is for radio. Yeah, face is for radio, hair is for the podcast. That's right. But I don't feel any older. That's for sure. So
that's good.
I got that going for me, which is nice. How about you? What have you been doing?
Oh, well, we like to talk about our weekend activities and how I've been coaching that basketball team for my son. That's officially over. So now we're just gearing up for baseball. Baseball's overlapped with basketball the last 2 weekends, but for the next 2, 3 months, it's just baseball, I hope.
Ah, okay. Yeah, there you go. You've been a busy guy, busy dad, right?
Right. So, Tony, I got a question for you. So, you said
Okay.
you don't feel any older. Was there
Right.
ever a time where somewhere along the way where you thought, I'm not young anymore, or I feel different than I did when I was in my 20s?
Oh,
Or you
sure. I mean, obviously, I groan a little bit when I get up from the couch if I've been there a while. Or get out of bed. I'm like, oh, it's a little harder, if I get down on the floor to play with the dog or something, getting up off the floor. Like my daughter's always saying, Dad, now that you're getting older, you've got to you sit on the floor and then get up without using your hands. And I'm
it's
like,
not.
no, yeah, well, that's not happening anymore for
I
me,
tried that
basically.
too. I'm
Yeah,
like,
yeah,
you're supposed
yeah,
to be able to do that? That was a little
yeah.
alarming how far off I was at even being able to come close to getting off the
I
ground.
know.
Doing that.
Well, she had me sit on the couch and say, "Can you get up without using your hands?" And I can still do that.
Mhm.
But it's much more of a struggle. I mean,
Yeah.
I could just levitate off the couch when I was in my 20s. I'd just spring off and didn't have to use hands or feet. Just
Yeah.
I just got up. So, but the bottom line is, there are things obviously that I notice. I'm not doing things. I'm done with like amusement park rides, like big roller coasters and stuff. I don't ever need to do that again or water slides. I mean, there are certain things where, yes, I've reached a stage in my life where I'm not going to do those things anymore. But other than that, I mean, I feel young.
Yeah.
The old phrase young at heart. You know me well enough now, Michael. I don't seem 60, do I? Like I'm in my
No, and it's
60s.
funny because I was thinking about this today, knowing that we're gonna record, and I thought, I get a lot of comments from my clients that have never met you, Tony,
Yeah,
but they've heard the podcast. Maybe they haven't watched it on YouTube.
sure.
Um, and I was thinking, you got this booming voice, and I don't think you could have that voice without the personality that goes along with it. So the personality really is just
Sure. Yeah.
follows along with that voice that you're hearing on the podcast. You're outgoing, you're upbeat, just like it sounds like on the radio. So
Yeah, I mean, I'm the same person I was when I was 15 as far as my personality, and I haven't changed, and
that's
that
what I
hasn't
was kind
changed.
of getting at because I think I've been realizing as I get older, the habits that I had when I was younger, good or bad, have followed me into adulthood, and I think
Yes,
that's just kind of human nature. I don't think
right.
we can make some changes, but we kind of are who we are.
Well, and especially guys. I think men have
Yeah.
as guys, we have more of a problem, or it's a little harder for some
You
guys
saying
to grow up.
maturing? Is that what you're trying to say, Tony? Grow up,
Yeah, yeah.
mature?
When I tell people I'm now 60 this week, they're like, there is no way. Some people are like adamant, like not just being nice to me. They're like, there's no way you're 60. And I always say it's my immaturity. It throws people off, right?
Yeah. You
So
sure don't act like it, Tony.
yeah, exactly. That's the for better or worse. So today, we're kind of joking about getting older, but there's a serious aspect of getting older that a lot of people put off or don't like to talk about and then don't end up planning for, and that's
Mhm.
long-term care. And this has come up in past shows, but I know you wanted to talk today about some long-term care myths and facts, right?
Yeah, Tony, you think it's a coincidence that we talked about your birthday, but this is an intervention.
Oh, no.
Your your family said, "Hey, please bring this up with Tony on today's show."
Yeah, they're
No,
pretty
I'm
sure I have
kidding.
early onset. Yeah, dad's acting crazy.
Yeah.
But, wait, he always has
Yeah,
acted crazy, so yeah,
that's the key. But yeah, long-term care myths and facts. That's what
yeah.
we wanted to cover in today's show. And there's a Kiplinger article. It's time to bust these 3 long-term care myths and face some uncomfortable truths.
Right, and I think that's gonna be important because, face the uncomfortable truth and, how do you pay for those long-term care expenses? And I'm glad we're gonna, dig into this because I think a lot of people misunderstand long-term care. They think when they think of long-term care, they're gonna think of nursing homes, right? But it's not just nursing homes. It's a
It's
full spectrum of services, but I bet you get a lot of people. I used to think this way. A lot of people say, "Well, I'm not gonna need long-term care." Do you hear that
oh,
from people?
absolutely. That's probably the number one answer first when I ask people if they have long-term care insurance as a part of
Yep,
just the intake, right? When I'm taking on a new client, there's a handful of questions we ask, and it's, do you have long-term care insurance?
right.
If they don't, their immediate response is, and I never will because I won't need it. That's a very common answer, and it's kind of
Yeah.
shocking. Um, and alarming to say the least because a lot of people say I'll just go to a beach in Mexico and live out the rest of my life on a beach, but I've heard that answer, Tony. I'm not making that up. That's actually an answer that I've heard repeatedly is I will go to Mexico and be on a beach somewhere.
Yeah.
But you and I know the reality is if you need long-term care, no one's going to wheel you to the beach in Mexico, right? You're not if you're at the point of needing care, you can't get there on your own. So that's not a real long-term care strategy. So if you
No.
thought that that was your long-term care strategy, sitting on a beach somewhere in Mexico, living out the rest of your life, that's not what long-term care is.
Yeah, and that's not necessarily a realistic. You can have those goals, and you can do that for as long as possible, especially early in retirement if you want to do that. But at some point, you're probably going to need long term care because Michael, the good news is we're living longer. The bad news is we're
We're living
living
longer.
longer. Yeah. So to deal with that and what happens, and medicine is advancing and we're living longer. However, more and more people every year need long-term care than the past year. And the recent stats that I have read, and it's a Kiplinger article mentioned this, and these are statistics from government surveys as well, is that about 73% of those who reach 65 or older, if you're 65 or older, there is a 73% chance you will need long-term care. That's almost 2 out of every 3 people who are over the age of 65 will need
Well,
long-term
more than
care.
a majority. And
Yes,
Tony, when I've ever done a seminar on this topic and we've had a room full of 30 to 50 people and we're talking about long-term care, we ask people to participate and show of hands if you have any sort of a long-term care coverage. Not very many people raise their hand. Then we ask, do you think you'll need it? And about a third of the room will raise their hand because they're a little more realistic about what their life is going to look like when as they age out. But then the last question is, how many of you have a loved one or know someone that's needed long-term care? And then the statistic of 73% of people over 65 and older will eventually need some sort of assistance.
yes,
The room reflects that answer. The
of
majority of the
course.
people in the room will raise their hand. They'll either have a parent, an
Right.
aunt, and an uncle, or just a friend that's needed long-term care assistance. So
Yeah.
currently, 1.2 million Americans are in some sort of nursing home facility currently.
Wow. That's a lot. I mean, that's really, really, a lot of folks, and everybody knows somebody who has needed or needs or is in long-term care. I mean, everybody I know anyway, and both my parents are in long-term care, and one of my wife's parents is in long-term care. So, yeah, 1.2 million Americans reside in nursing homes.
Yeah.
That's amazing. And then that's not even including people who are have home health aides or adult daycare or assisted living, right?
Right. And so you said everyone kind of thinks of long-term care as just specifically being in a nursing facility, but there's things like you mentioned, home health care, maybe having just an aide stop by every once in a while, or maybe you get picked up and go to an adult day health center, or now you're in an assisted living or a nursing home. So there's different variations of what long-term care might look like for you or your family member. But the statistics are very sobering, right? You just rattled you are the statistic. Your family is living the 2/3 statistic
Yeah,
right now, right? So,
right. We are.
it's very, very common. I think in my family, it's gonna be pretty much we'll be a part of the statistics too. So, how do you find coverage for it?
Yeah,
And, there's self-insurance, and I think the majority of the people end up being self-insured, whether out of lack of planning, lack of resources, or just they thought that they weren't going to be a part of that statistic of the 73%.
right.
And what does self-insurance look like? So what are some of those costs? The article references 2024 average annual cost. So we do know that these costs have not gone down since 2024, but these are the most recent statistics we can draw from.
Sure.
Uh, if you have a homemaker service, it's about $75,000 a year, $75,500 a year. A home health
Wow.
aide, $77,800 a year. If you just need some assistance and need to get out of the house and you're going to an adult daycare center, $26,000 a year. Assisted living, $70,800 a year. And a nursing home, semi private, $111,300 in private. So you want your room to yourself, $127,750
Per year.
per year average
Yeah.
across the US. So
That's a
you and I
lot.
live in expensive states.
Well, yeah, and $127,000 a year plus for a private room and with full-time care. My mom has been in long-term care and needing full-time skilled nursing care in a nursing home for the last 4 years, and it's $11,000 a month because she needs all the services. It can be as high as 13,000 at some facilities that we looked at. So that's real money. And the question then becomes, how are you going to pay for it? And I just want to go back to how many people I just want to go back to one thing before we move on and talk about how to pay for it. And that is um, when we're talking about how many people are going to need long-term care and people thinking, well, I'm not going to need long-term care. I'm just going to live in my house until I pass in my sleep nicely. That's everyone's dream. We all want to do that. And you can get in-home health care. But if you don't have somebody else there in the house that lives with you, that sleeps there at night that can take care of you, you're going to need 24/7 care, and full skilled nursing care. So at that point, most people have to go into a nursing home. I'm just saying. And the people who will need some form of long term care, again, it's almost two-thirds, it's over 70%. And that's a core. Um, I wanted to give the source for that. And if you Google it, that's what you'll say. What percentage of people over the age 65 will need long-term care? It is 70 plus percent, and it goes up every year. It ticks up a little bit, but that's for the Administration for Community Living, or the ACL, and they do estimated costs and talk about this and do a lot of studies on long-term care. If you want to look that up, it's a great resource. Again, that's the Administration for Community Living, ACL. And it's important to understand these facts. So, but you just made a great point of what the costs will be. And I know there are ways to cover the cost. What are some ways that I think people think Medicare is going to cover the cost, but it won't, right?
Right, and we had our last show was on, Medicare, and one of the things we highlighted is that Medicare does not cover long-term care. They're 2 totally separate things. So, when we had our show last week, a lot of people thought that Medicare would cover long-term care costs, and it does not. So, what's the backstop? If you're self-insured, it's just gonna be your assets. You have to draw down your own assets, whatever you've saved, before you could qualify for Medicaid to kick in, you're going to have to draw down your assets, your savings, your retirement accounts. Um, they've had a couple of provisions along the way. You don't have to sell your house anymore or sell your car. You can keep those two assets, but pretty much everything else has to be drained before some sort of government assistance and Medicaid kicks in to cover your long term care.
Yeah.
And if you're self-insured, 4 years of your mom's expenses of $11,000 a month, right? We could all do the math. It's a very costly thing to do if you're doing it out of pocket. Um, the other thing to think about, Tony, is if you're self-insured and you do run out of uh, money, your mom might have to go to another facility if you're self-insured. Medicaid kicks in, she might not stay at the facility that she enjoys being at, right? Because
Right.
they're expecting a check to be cut. It's a business.
Right. Yeah.
And they can't just say, "Oh, we love your mom so much that we are not gonna fill this bed that we know will
Right.
be
Right.
$11,000." The nurses wanna dedicate their time and they'll volunteer. No, it's the reality is once you run out of money, you're going to a different facility, and the facilities that Medicaid is covering, probably aren't gonna be as nice as the one that you could, if you were paying for it out of pocket, be in.
Yeah. There you go. I think that's really important. And obviously, Medicaid will help cover it, but you have to pretty much be broke and have a spend down of everything. And there's a 5-year look back. Like if you bought a new car 2 years ago, a brand new vehicle for $80,000, and or you gave away money to
Right.
grandkids.
I was gonna say it's more like all of a sudden you came down with this ailment, you're gonna go to a facility, you don't wanna pay for it, and you gift your family all of your
And a
assets.
lot of people try that, but it
Yes,
doesn't work
it does
because
not.
the state will come back and they'll say, "Okay, um,
2 months
w
ago, you had a quarter of
we're
a
not."
million
Yeah,
dollars.
so we still count that as an asset of yours.
Mhm.
Any asset you've had in the last 5 years, we look at it as you still have it.
Right.
And
Because you probably
so
do, and you're trying to cheat the system. So, at
right,
least there's
right.
some backstop against it.
Yes, yep,
We talked about busting some myths. Uh, you must so one of the myths is that you must buy traditional long-term care to get some sort of coverage, right? So there's strictly long-term care insurance that does cover your long-term care needs, right? Once you qualify for long-term care, you've had this insurance, it kicks in and it pays the bills directly for you. That's kind of what on a 30,000-foot view of what long-term care coverage is. It's just to insure you against the possibility of needing long-term care. It doesn't
yeah,
cover anything else. You pay a premium specifically for that purpose. Um,
yep.
but there are alternative ways to cover long-term care costs that maybe weren't available in the past. And so that's the first myth. It doesn't have to be long-term care specific insurance anymore to
Well,
cover those
yeah, and
costs.
that old style of long-term care insurance that people have used, over the years and was really popular in the '80s and '90s and even into the early 2000s, it just started as long-term care needs increased, in the 2000s, it just basically died out. Insurance companies don't cover it anymore because or don't carry even just traditional long most A-rated company and big companies will not carry it, and if they do, it's going to be outrageously expensive, and that insurance was faulty because you don't get that money back. You put all this money into it each month, and if for some reason you don't, you do pass away in your sleep, or something before you need long-term care, then all that money is for naught, and it doesn't go to your beneficiaries, it doesn't help your family. So they've basically done away with that. I mean, there's still a few policies out there with some companies, but insurance companies have known that this is a need and gotten really competitive because they still want your business. So they've come up with some good alternatives like hybrid policies, right?
Right, and we've talked about this on the show before, but yes, a life insurance policy that allows you access to the death benefit if you qualify for long-term care needs. And there's
Right.
two qualifications. There is strictly a long-term care rider, which would act just like your long-term care insurance, but give you access to the death benefit if you need it, and it pays your bills directly to your long-term care provider. Probably has the same exclusionary periods like a long-term care insurance would have, where you have to pay out of pocket for maybe 90 days, or you have to be in the facility for a certain period of time before your insurance kicks in, which is the same with just a traditional long-term care policy. But there's
Yeah.
also the other side where it's a living needs benefit. What are some other terms that you've heard? It's a rider that's attached to a life insurance policy. It gives you access to your death benefit. Some of the policies that I've written for my clients, it's called a living needs benefit. I know other states have different types of terms, but you actually have access to the death benefit, but it doesn't pay directly to your care provider. So
Right.
you could stay at home. You could go to Mexico as long as someone
Sure.
brought you there.
Sure.
But you have
Yeah.
access and you have discretion on how the money's spent, and that's kinda good or bad depending on if you have someone that you trust that's actually gonna pay the bills. So if you're in a
Right.
facility, you still have that second step of making sure that the facility gets paid from the money that's coming out of your policy. You better have someone that you can trust that's actually gonna do that. Some of the horror stories are things like kids get the check, they don't pay the facility, they're at the casino. Like, there's
Oh,
no
no.
backstop towards what it gets paid for. So,
Yeah.
the discussion when we write those policies is, do you have someone that you can trust to make sure? Because the the freedom, I really love those living needs benefits because if you never want to go to a facility and it's paying enough where you can stay at home, have 24-hour care at home, it's a lot more freedom to spend it on what
Oh,
you like to do.
yeah, it's, that's a more ideal situation, and I love the fact that they have policies now that, you can still, while you're alive, access the death benefit, to help pay for long-term care, and utilize that death benefit while you're still alive to do that, and then if you what you don't need still will go the remaining will go to your loved ones or your beneficiary who you have listed or beneficiaries. And or if you don't need it at all, it will go to your beneficiary. So I love the ability to have a long-term care rider that will help cover it. And you're right. That's a good word of warning. You just need to make sure that it's set up responsibly and you have a good executor of that who will help. So,
Yeah, and as the advisor or someone that's helped you write that policy, when the time comes, we should be your resource. You should be able to call whoever the agent was that helped you put that policy together to say, "Oh, I'm sorry to hear that you're going through this situation. Let me coordinate the assistance for you." Right? Or
yeah.
let me put you in touch with the right person with the insurance carrier. They usually have a specific team that's just handling the long-term care aspect of the policies, and they really are good at coordinating and getting the payments out timely. Um, so unlike long-term care strict policies, you kind of find pitfalls of I get moved between facilities and I still have not qualified for
Right.
the long-term care payment.
Yeah.
And you really highlighted, I'm sorry, I'm bouncing around a little bit, but you really highlighted one of the really cool benefits of the life insurance policy. If you don't use it, the amount that you have not used on yourself goes to your beneficiaries tax-free,
Yep.
right? Unlike the long-term care policy where it's like your car insurance, you spend everything, you have your premium that you pay every month. If you don't get in a car accident or you don't need long-term care, well, that money's gone. But with a permanent policy that has a life, with a long-term care rider or something similar, it goes somewhere. Your policy is not paid in vain. It'll either pay for your long-term care or it'll go to the next generation.
Yeah. Yeah, there you go, and I love that, and I love these hybrid policies that they've come up with. I'm glad that the industry is, so competitive, and that has helped. So, traditional long-term care insurance is pretty much off the table. You have the hybrid alternatives that you mentioned. Even annuities, you can have an annuity. A lot of retirees use some type of an annuity as, retirement income, and you can even add a long-term care rider to that, right?
Yeah, a lot of the income derived annuities have some sort of a long-term care rider attached to it, and there's usually not a large fee. Some of them are offered without a fee, where it will double your income as long as there's a cash value still available.
Yeah,
So if you're receiving $2,000 a month from your long-term care or from your annuity policy, I'm sorry, it would double if you qualified for long-term care assistance as long as you still had a cash value attached to that policy.
yeah,
That's one example. There's others that are specifically for long-term care backstops. They're kind of like a return of premium type of a policy where you just a lump sum gets put into this annuity. It has a multiplier for long-term care needs, and it's specifically for long-term care, not for asset growth or for income. But it's instead of having this money sitting in a bank account that would not have any sort of a multiplier if it just was self-insured in a savings account, it would have some sort of a multiplier will help pay for long-term care needs if you
yeah,
qualify.
yeah. But everybody's situation is different. There's no, one size fits all solution here either, right?
Right. Obviously, with a life insurance policy, you have to qualify for it.
Yeah.
Or
Yeah,
if
you
you
still
want to get a
yeah,
long-term care policy, if you still want to go that traditional route, it has its positives, right? We kind of said all the negatives about a long-term care policy.
right.
Some people still are interested in those, and there's a
Sure.
handful left.
Yeah.
But
I
you and
mean,
I,
that
I'm
is
on
an
the same
option. You
page.
don't wanna
An
take
option.
I know that you don't wanna take an option off the table, and maybe I was a little hard on it, but it is,
I'm with
I
you, Tony. I'm not a proponent of a traditional long-term care policy, but if
right.
someone came to me, I'll put them in touch with the right policy
Yeah.
for them.
If they
Um,
have the money and they don't care, and you show them the alternatives, then it is still their decision. But yeah, I know you would probably highlight some other, and some people even want to self fund it, but you would have to have an absolute enormous amount of money saved for retirement to be able to self fund $12,000 a month for any length of time. My
mhm.
mom is going a lot of people say, "Well, if I'm in long-term care, it'll be a year or 6 months or a year or just 2 years at most." My mom's gonna go and she's actually at 4.5. She's going on 5 years. And so, you know what I
And,
mean? It's
we don't like to put statistics. I don't have, something to reference, but I do know that, the average is somewhere around 4 years. I think it's a little over 4 years if you
yeah,
go
and
into
that's
long-term
gone
care.
up. I remember just 10 years ago looking at it, and, I think it was 2 or 3, and I think it's gone up too. So, yeah, and that's another thing that the site I cited earlier, I
Mm.
would recommend people, check that out
So that's the
because
ACL,
Yep,
not
yep.
the ACLU,
No,
but,
no.
the they'll make sure that your rights are protected while you're there. The
Yeah.
ACLU will.
Yeah, 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 no, yeah, they will. They will, but, yeah, it is really important to make sure you're taking care of that. I mean, it's just you have to do it. Um,
Last thing,
uh
Tony, I just want to talk about is, we talked about the importance and the probabilities of needing long-term care, but it really goes into just looking at your overall financial plan, making sure that your advisor is looking after the possibility of needing long-term care and making sure that you're covered. At least having that discussion with you. It's something that I talked about with all of my clients. I can't say that I have 70% of my clients signed up for it. So it's just an individual's decision once they've been educated on the probabilities if they would like to um, extend coverage to their family or themselves. Unfortunately, a lot of people still, after being educated, decide to roll the dice, be self-insured.
Yep,
But it should be a part of a discussion with your advisor and a part of your financial plan. So if your advisor is not talking to you about it, or if you have more questions that maybe we spurred, Tony and I did during today's show, give us a call. We could talk about possible solutions or holes in your current plan. The phone number is 916 469 9016. Kate will put you on the calendar, or you can go to thematterfinancialgroup.com. You can look at all the ways that I work with my clients, but there's also a Calendly link if you wanted to set your appointment on your own. So that's thematterfinancialgroup.com.
Yep. And once again, if you want to check out some of the stats we're talking about, it is acl.gov. It's an official government site. And they have a website attached to that, longtermcare.gov. But you can get to it from acl.gov. Just type that into your web browser, and all the stats are there. It is interesting, and there are a lot of myths and facts listed that we talked about. But great show today, Michael. A really important topic. Don't put off long-term care planning. Don't assume it's for everyone but you, especially for married couples. I mean, the odds of you or your spouse or both needing it are great. You want to have a plan in place. What will we do if we need this, or more than likely when we need it, right? But make it part of your overall retirement plan. And that's what you do, Michael. You help so many people with this. Again, that number 916-469-9016. Give Michael a call, set up a time, schedule a consultation. There's no charge, no obligation. Michael, great show. Listeners, thanks for tuning in. That does it for today's episode of the Matter Financial Report with our host, Michael Matter.